So, what happens when the US economy shrinks for the first time in 3 years? Just as big tech starts reporting earnings? Let's break it down. Hey everyone, it's Thursday morning, May 1st, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella, here to break down yesterday's market action in just 2 minutes. Before we get started, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. The stock market yesterday gave us one of those bad news but not horrible kind of days. The Standard & Poor's 500 ended slightly higher, up just over 0.1%. The Dow added about 0.3%, locking in its longest win streak of the year. The Nasdaq dipped early, down more than 1.2% at one point, but clawed its way back to end almost flat. So, what was weighing on sentiment? Well, we got a fresh look at the economy, and it wasn't great. The U.S. economy shrank at an annual rate of 0.3% in the first quarter, according to the government's first estimate. That's the first contraction in 3 years. Economists were only expecting a small dip, like 0.1%. The big drag? Imports. It seems companies started stockpiling ahead of President Trump's latest tariffs, which hit confidence. Also, a report from ADP showed private hiring slowed down in April. Businesses are clearly feeling the heat and staying cautious. An uneasy environment, as one expert put it. On the inflation side, things are still sticky. The core personal consumption expenditures index, basically the Fed's favorite inflation metric, rose 3.5% in the first quarter. That's higher than economists expected and up from 2.6% in the prior quarter. So, yeah, higher inflation and slower growth. That's not the combo the Federal Reserve wants to see. And here's a twist. Stocks got a little boost late in the session after a Chinese state-linked social media account claimed the U.S. reached out to resume trade talks. That's not confirmed, but markets love even a hint of progress. And we got some fresh earnings after the bell. Meta beat expectations, reporting earnings per share of $6.43. That's a jump of 37% from last year. Pretty impressive. Microsoft also topped estimates with third-quarter revenue of $70.1 billion, up 13% year over year. Another solid showing from big tech. All right, that's your rundown for this morning. I'm Endrit Sella, and this was your Capital Markets Quickie. Catch you tomorrow.